I'm going to start this discussion a bit differently. I'm going to do a quick shout out firstly to the members channel. Now over there, if you are looking for extra insights, I do post occasionally there. And if you like to support the channel, do look out for it. I think it has great value. And you can always pick up the newest videos by checking out the playlist, which can be seen over here. Now today's discussion is something that I've shared before in July on the members channel. And it reads that we may see a July and August bear market rally that lasts for many weeks. Now this looks to be playing out exactly like that. Maybe there's some luck involved in it, but let me share with you in essence what was exactly mentioned. This is in the dot-com bubble crash, year 2000. I have frequently mentioned that I think right now with the tech exuberance that we're seeing in 2022, it mirrors a bit more to year 2000 than the global financial crisis in 2008. So if we were to see parallels between what has happened, this is a possible journey moving ahead. Again, there's no crystal ball. What we're trying to understand is psychology and why things play out the way they are. You'd see that the peak was actually in September 2000, correct? Then market started decline aggressively. And by 3 or 4 months, it's actually reached a point where it's lost close to 20%. Then subsequently, that big plunge that pulls it down beyond 20%. Let's zoom in a bit. So I've done a previous tutorial to show you that when markets cross into this bear territory, typically sentiment is damaged and things start to get gloomy. And this is how it played out actually. You see that when things go down, they also don't go down in a straight line. What I want to describe in this members discussion is the psychology of getting tricked by Mr. Market. You know, Mr. Market has all sorts of things to pull out the last optimistic dollar before it springs back up. This is what I'm trying to caution against. Take note, this is about 7 months into the bear and it's cracked 20%. A very similar situation to what we are seeing now. And what happened unexpectedly is the market rallied, correct? It sprung up big amounts, 20% gains from its low of 1001. Now, the question is why this has happened. And if we were to zoom in too much, we kind of don't see the information clearly. This is a whole gain that spans more than 1.5 months, correct? Great recovery story, great euphoria. You get it? When markets spring up, it's not 1-2 days. Sometimes we focus too much on day-to-day trading. We forget that good news comes in weeks or so. And then what happens is after a couple of weeks of euphoria, it drags down further, moving to a new low. Sucks out the soul of many investors. Now take note, as we move along this timeline, we are getting a year into the bear market already. Now a year plus already. Then there's a subsequent bear market rally again. Now this is even more disgusting. This is a multi-month bear rally. All the way from October to March 2022. So this really gives people false impressions, false hopes before it drags lower again. This is what kills the souls of bullish investors. Now let me pause it here. What exactly causes a new low? It's pretty simple. If you look at what's happening in Chinese equities, I think you can find clues of what is extreme pessimism. Take for example this headline. Huawei's founder is now sounding economic slump in China. We've all known about it, but when someone credible mentions about it, it puts a lot more weight. What about this? Yale's Stephen Roach has also mentioned that growth will be difficult in China. And when credible people talk about it, YouTubers also jump on it. We have big YouTubers like Graham Stephan mentioning doomsday happening in China. With another big channel, Proactive Thinker, also talking about China's housing crash and how it will affect the overall economy. Now when big YouTubers talk about it, small YouTubers also follow suit. And that's where a real herd mentality goes towards. That's why I'm not doing all those nonsense like Chinese economy is going to collapse in 21 days. No, that's not helpful at all. Why? Because at the bottom of the bear market, there is only bad news. There's no optimism to think. You have to understand that the last bullish new investor has to get sucked out first before the market can recover. It must be the darkest before it starts to turn brighter. So if you're new to investing, you may be thinking what I'm saying is illogical. Every indicator suggests that Chinese equities are uninvestable. On the other hand, if you have invested past 2008 global financial crisis, you kind of understand what I'm suggesting, because back then in 2009, everything was just as ugly. And from then on, we've seen a 10-12 year, multi-year bull market, especially for US equities. What happens in a bottoming phase? This is how it will look like. You realize that after it is rallied for multi-weeks over multiple times, many investors get discouraged. Every time they dip their toes in, they get burnt. Every time they put their feet in, they start to sink. In a bottoming phase, you realize that markets have been bearish for maybe a year. And when things start to finally look optimistic again, it starts to plateau. Not too bad, but there's just very little growth prospects to things. And then, with yet another bad news, market makes its final low. Maybe that's happening right now in the Chinese equity market. That's why for myself, I've invested even more into Chinese equities, thinking that it could be in this phase whereby it's been depressed for quite long and there's just disbelief. But if Chinese equities do reach a new low, quite possibly I'm also wrong. It could be in these two phases instead, whereby it's still hovering in the anger phase and it still needs further time to digest. Now at this juncture, I'd like to ask a question also. If you're an investor, is this a great chance? Is this a great risk reward? In terms of valuations, it certainly cannot be expensive. In terms of market psychology cycle, it's at worst only an anger phase, which is not where we see big declines. You have to ask yourself that question and give yourself enough time if you intend to get invested. Just as a quick update, I've continuously invested $1,000 still into Chinese equities and I've stuck to the plan. Something I've echoed before, and that's why you see the portfolio now, it's still gradually accumulating. When you have a plan, stick to it. Don't let the short-term noise distract you too much. Don't put too much focus on them. I believe that US equities, in particular NASDAQ, is not likely at this phase yet. It's probably somewhere above in this journey downwards. Where exactly? No one has a crystal ball. And let's assume it's somewhere above right here. What it means that after a bear market rally, there could be further depressed periods. There could be more bad news. And I've actually prepared 2 points to share with you a bit deeper on my pessimistic view. The first is that you realize that NASDAQ had a spectacular rally. It really takes time to unwind. And you really cannot compress price earnings multiples within 6 to 9 months only. This is a chart comparing NASDAQ against 4 of Singapore's biggest companies, which you probably can already guess: DBS, UOB, OCBC and Singtel. Looking at this 5-year chart, any first level thinker or any new investor will be gravitating towards NASDAQ in blue because there is concrete evidence that it has outperformed. It makes sense to go there. The eye gravitates towards the outperformance instead of periods in 2018-2019 where it was relatively equal also. Never mind about it, because the simple assumption is to extrapolate this outperformance all the way into the near-term future. In this chart, I can't even draw it to 2025. You realize that if the hopes of extrapolating this outperformance takes place for the next 2 years, NASDAQ should easily hit 24,000 already. Compare that to Singapore banks, which have done a small gain, pretty boring. Or worse still, why think about Singtel, which looks as dead as a fish. Singtel has in the last 5 years lost 28%. But since you stuck with me to here, you do know that we advocate critical thinking. We do advocate understanding valuations a bit deeper on this channel. And if you appreciate something different, help me smash the like button early, because I have something to share with you that might blow your mind away. You realize that investing is not as simple as this. There are periods of overvaluation and there are extended periods of over despondency. Singtel, I'm not a fan of it, definitely. And you've heard me many times on the channel mention that I'd much rather you invest broadly into STI or buy Singapore banks. But if we see in terms of the 1-year performance, you realize that Singtel is actually outperforming DBS, UOB, OCBC and NASDAQ. In particular, its outperformance over NASDAQ in 1 year is ridiculous. Again, this reinforces, in investing, we cannot extrapolate what has happened and put our hopes to it. We really need to look in terms of valuation, and when markets run up over extended periods, they could underperform also for extended periods. The second reason as to why I'm pessimistic about NASDAQ is that it's quite obvious that Apple is the one that's holding it up, and Apple is also the one holding up S&P 500. I don't know whether it's Warren Buffett buying Apple shares that is causing optimism and holding it up, or is it passive indexes allocating and just going blindly with the biggest market cap, assuming that you'll never fall. I don't know about it, but let me show you a chart that really explains what is going on. The first part to analyze is that when markets started to turn south at the start of this year, Microsoft and Apple were still holding up the index. Everything else was coming down in the tech space. That includes Alphabet, that includes Amazon, that includes Facebook. But fast forward 8 months later to now, you realize that Apple is still positive, correct? But everyone else, including Microsoft, is now heading deeper into the red. The real capitulation is when the bluest of the blue chips also fail. That is how I've seen in terms of history what plays out. A very simple place to look for something to compare against is in the crypto assets. Bitcoin, Ethereum have lost more than 60% in terms of value, and they are the bluest of the blue chips in that space. If you understand that logic, you understand that when real pessimism sets into US tech, Apple will also need to start coming down. And since you stuck with me to here, I have a further bonus tip to share with you. Predicting the market direction is fun. I'm guilty of it also, you can say it that way. But the main thing is this. I would strongly suggest that you start looking at valuations a bit deeper moving forward. Try to put a very conservative valuation to something that you like to buy. And when the time comes that it hits its valuation, you have to start acquiring it, because that is when you know how to take action, and eventually that will pay off big time to help you in your financial freedom journey. If you agree with that, smash the like button as always, and check out some of my previous tutorials which I've touched on that could help you in your investment journey. This one in particular touches on the bear market. I don't know if you've seen it or not, and I'll invite you there too. With that, I'll sign off from here and see you there. Take care and goodbye.